So this is weekly commentary 44. Now, from the previous weekly commentary, we saw that this candle swept, took out the previous candle's low, and we had a somewhat of a close higher, right, compared to where the low is. So we're anticipating, an early Judah swing for the next week, like a Monday, Tuesday down, followed by a move higher to, have a end on a bullish week. Now, this weekly candle, right, look at the candle before it, the low and the high. The low and the high has remained intact. What does this mean? That this whole week, right? This whole week was just a consolidation. It's just an accumulation. Why? Because the buy side liquidity pool of the last week and the sell side liquidity pool of the last week, they weren't attacked, right? So there's been no distribution because buy side liquidity and sell side liquidity, it hasn't been attacked. So there's just been an accumulation of orders. Let's look at the candles with this lens. Every single candle, right? Let's see how many candles until we get a candle like this. And this is called an inside candle. And the inside candles, the same is fractal for the daily, for the 4 hour. Your the connection that you're making with them is that it's an accumulation, and following it doesn't have to be the next candle, right? But following them is the move because every single market, right, goes in a state of accumulation. Followed by accumulation, you get manipulation and distribution. You get reversal or expansion, right? Now, look at this candle. This is an inside candle. This is not. This is not. This isn't. This isn't. This isn't. This isn't, right? This isn't. This isn't. This isn't. None of these are. None of these are, right? This in June is an inside candle, right? You see how it was inside of the range of the previous week? And then what happened after that? Expansionary move higher, right? Retracement OTE and expansionary move again. Now, of course, it's very common around this time of year to get inside candles. I think retail refer to this as an inside bar. Now, this doesn't mean that the next candle I'm expecting it to be, volatility in it. The reason being because it's essentially now it's the week of Christmas. I think today is Christmas Eve. Tomorrow is Christmas. Now, following Christmas, if you look at the calendar, you have all these holidays, right? The 26th, 27th, and there isn't essentially there's no economic drivers. Even on the first week of Jan, it's the same as the week that we're going to go into. I say, right, well, for myself personally, I'll probably start to try swinging the market again, coming around the end of January, third week of January, around that time. If we go to, you know, I want to see, some oomph in the market, and this is what's gonna let it happen. I don't want to participate in the initial move. I don't need that. I just want to see where is the market likely to reprice to. That's the name of the game. From here, I can't really tell where the market's trying to reprice to. It's going sideways, right? It's very tough. Now, you can make predictions, of course, but is the prediction educated or is it just what you want to happen? Remember, what you want to happen and what is likely to happen is two very different things. And we want to see what is likely to happen, not what we want to happen. There's a big distinction. It's the removal of your ego because your ego is what you want to see happen. Now, personally, right, what I'd want to see is I'd want to see the dip below here and offset a reversal towards the highs. And the reason being is this. If we look to the bonds, right, we're seeing strong move across the US 10 and the US 30. Now, if you go to the daily chart, what we met with on the thingy, on the US 10 year, we had this high, low, it's not really high yet, and now we broke above it, right? These highs here are a clear target, 3.84%. Now, the bond has showed its hand. The DXY is likely to follow in line with the bonds. But that doesn't mean that it's going to offset. I'd prefer it to have a manipulative move beneath the low first and then go in line with the bonds. That's going to offset the move, if you go on the weekly, to that weekly fair value gap we see from this candle's high to this candle's low. If look at the open high low close here, pay attention to the L, right? This candle's L is 418, right? And this candle is 448. There hasn't been a sweep on this candle's low yet, and they're very equal. I'd favor, right, and I'd wait for this. a move lower beneath this low, and then offset higher. And I'd hunt a daily market structure shift in that area to get in line with, the bonds. Now, if we look at euro broke a lot of people's hearts this week. If we go to where the week is, right, this has been the week traded for the euro USD essentially. A pure sideways. Even from here, it's pure sideways. If we measure the range of euro USD, right, this being the lowest point, the range for the whole week, right, the week of it, 86.5 pips. We've seen daily candles do that, and this is the range of the entire week. This isn't something that you want to trade. Wait for clear displacement. Now, pound showed his hand a bit faster. Now, usually what happens is this. It's Euro GBP that is behind the antics of why pound, ran lower and euro didn't. When Euro GBP offers lower prices, that will let Euro USD fall, and that will make GBP USD consolidate a bit like how Euro did. They always kind of play catch up, and you can backtest this yourself. When the DXY and one of them move in line, the DXY continues this run, and the other one, from Euro GBP, there's a reverse on Euro GBP offsetting the opposing pair, and the other one begins to, accumulate. If you go to the daily chart for GU, right? So it's how we expected it from the previous weekly commentary. We wanted to see them move up into this fair value gap and then move lower. I have my eyes on this area here, right? Specifically, if you go into the weekly, I believe it's on my notes 1.17, right? It's this area around here. I want to see the area underneath from this candle's low to this candle's high, right? I want to see this area get traded into for GBP USD. Now, in saying that, don't expect that to happen within 1 or 2 weeks because of the festive period. And from looking at the Forex Factory calendar, the next 2 weeks we are met with, you know, the bank holidays. We're not expecting large range moves. It's a time where you guys should honestly enjoy yourself and reflect, right? This mentorship has nearly been a year now. Now, some of you have, well, there's quite a few of you that you've stayed for a whole year. There's a lot of you that have been here for some months. How much have you learned, right? If you've been here for 3 months, right? How much have you learned since you've come in here to 3 months? I'll put into perspective for you. Everything I'm teaching you guys to the way I'm delivering it to you has taken me 4 years. Four, right, to understand it in the way that I'm delivering it to you. Now, the way I'm delivering it to you, our understandings, they may not be exact, right? Maybe I'd always have a level of understanding above you and not in an arrogant way just because of I'm the one delivering it to you, right? I'd say you have around 80% of it, 70% even. It took me 4 years. There's some people that have done this all in 3 months. Imagine yourself in 4 years, right? In 4 years' time, your understanding should, you know, it should even be a comparison to myself. And honestly, there is no reason if you're in this mentorship giving it your all, because maybe there's some people in here and you're just not studying enough. Maybe you think you're in here and there's magic. I just need to watch the videos. I just need to get to chapter. It's not about making your way through the content, right? It's about making your way through the content with the understanding. It doesn't matter how fast you get to chapter 3, chapter 4. It has no meaning if you're not taking notes, if you're not actively participating, if you're not like asking me questions and making use of having access to me. You're hindering your own progress. Don't waste another year. A lot of you guys are prepared and are just waiting for that February to come so that you can have a go at these challenges, and that's good. How about, is it everyone? For you listening to it, is it yourself, right? Take life serious. Outside of trading, right? You need to have you need to be, a person with aspirations outside of trading. Everything is a relay. You cannot be good at one aspect of trading and another part of your life lacking, right? Get serious about it. if, there must have been some things where you learn just from your own experience, your own journey, you learn things from the previous year, right? And it doesn't have to be technical stuff. It could just be, I worked my arse off for 3 months. And the guys that are funded, listen to this as well. You guys got funded. You've tasted success, right? You've had that. Some of you are still funded. Some of you perhaps got funded and you lost it. You tasted success nonetheless, right? And that is something you learned from your journey. Now that you've tasted the success, and some of you are getting closer to it, right? It's in your face. It's around the corner. You can smell it. This year, go and get it. There's nothing stopping you. The content is pretty much done in terms of lessons. Everything is covered. You just have to go through, refine. And some of you need to start get a bit more comfortable executing on a demo. Back testing is all good. You asked me what more back test should I get? Instead of back testing it now, forward test demo get, because the only thing that's going to make you money in the end of it is your executions. Your back test is all just going to comfort and complement your execution. It's helping you understand price more so that you can execute better. However, it's all wasted if you're just back testing and you're not executing. We have to focus on the execution. That's what's making us the money, right? Um, let's look at the COT data as well. It's quite interesting. Um, first of all, let's start off with Euro USD. If we look to the Euro, right, you see how now there's been like a increase in the net short position. You see from here, there's a move down now, and we're in a level of premium and we're accumulating. Remember, right? Now, if we go to futures for the DXY, we see the opposite, that move, higher, and it's quite significant, right? That move higher, and we're in a level of discount. Now, that doesn't mean it's going to be one way up. I'm still expecting that manipulative move lower because we're accumulating right now. Usually, I want to see the AMD followed by the accumulation. If we go back to the DXY, right? Let's go on a daily chart. I want to see the accumulation, that manipulation, and then I want to see the distribution. That's what I'd favor, right? I'm not. I don't want to see just us move and get left behind. I'd rather, and it would confirm a longer term bullish bias for the DXY, that move lower first, then you know the breaker forming, and then we have a market maker buy model to work on, and that target, and that could be 2 months worth of bias, trading up towards here. Of course, we're going to have days where we expect retracement down, continuation, but we have an easy framework to work in. Now, until that's clear, sit out. You don't need to push buttons every single day. Remember, if you cannot, and this is a key for me, as when I realized this and I accepted it, if I don't know where the next repricing is going to be, I'm not going to involve myself. Because if you try to involve yourself when you don't know where the repricing is, it is a gamble. Because what is a gamble? You go in, there's a chance it could go both ways, and you don't really know. It's not favoring one way, right? Now, that could be your trading if you're not anticipating where the most likely repricing is. So stay away from that. Now, I don't want to keep this weekly commentary long. It's Christmas Eve, and a lot of the people here they celebrate. And tomorrow, perhaps perhaps you may not even watch this weekly commentary, right? There's no targets right now. It's a pure holiday season. Enjoy yourself. Remember your life outside the charts, right? The market will be here. The market will be here in February. It will be here in the middle of January. Enjoy yourself now to the middle of January. Have an extended break. How do we know we have an extended break? We got all of these, white folders, right? And I say all the time, keep the white folders on because a lot of you remove it and you toggle just the red and orange. If you have your white folders removed, you won't even know that this is a bank holiday. Keep them on, right? So with that all being said, wait for the repricing to be clear. You know what I'm favoring? That manipulative move under, this low, which is the weekly equal lows, right? You see from this low, right? I'll just draw it out so it's easier for you guys. Right, you see how they're relatively equal. Resting right underneath it, we have that weekly fair value gap in here. I'd favor the move down into that and then offset. And that will be in line with, the bonds. We have retracement possible into here in this high to low. Same with the US 30. Now I like to use both of them, right? They essentially they're longer terms, but I just like to use both of them just for any divergence measures or whatnot. But that's what I'm expecting. So make sure you guys enjoy yourself tomorrow. The people that are, feasting tomorrow, spend your time with your family, right? I'm telling you from a position where there was a time I didn't spend enough time with family, whatnot, last year, the last 3 years perhaps of my life. Those things will matter, right? It's one day, just enjoy yourself. Do not get addicted to the chart. Obsession is one thing, addiction is another. Be obsessed with being good, but don't be addicted to the chart, right? Make the distinction. So, with that being said, I'll see you guys in the next one and take care of yourselves.